Let's connect with Pankaj Pandey, who's joining in on the show. Pankaj, hi there. Good morning. Lots to chat about. Maybe just get in your take first up as to how you're looking at the overall earnings, because that's a bit disconcerting. The fact that there's such a divergence from what the street was penciling in and the kind of commentary and the kind of results that a lot of companies have been putting out, and it's across the board. The slowdown seems to be quite evident. How much of a concern is that?
Hi, good morning. Thanks for having me. I think overall, if you look at this was expected to be a softer quarter. We are already at peak margins of 19-20% for Nifty. So incrementally, margin expansion was definitely not the case. And we all know that you have big sectors like IT where the demand is still sort of soft, and possibly Q4 is where some bit of a revival can be expected. And obviously, we'll have US elections sort of impacting the sentiment as well. And commodity prices continue to remain soft, whether it is for steel, whether it is for cement. The refining margins are definitely down because of the global slowdown. So I think largely most of it is there in the prices. Our sense is that second half is going to be better. But I think the Bajaj commentary of festive season sales being in the range of say 3 to 5% was a bit of a dampener. And as a result of that, overall, that has sort of softened the mood of the market. And we've seen about 6% kind of a correction in the markets. Typically, any year, you could easily get 10-12% kind of a correction, multiple corrections in the market. So 6% is already run at max, possibly 4-5% is very much possible. But our sense is that market ideally should bottom out at current levels. The second half is expected to be better because I think our sense is that a lot of ordering tendering should happen, given the fact that H1 was quite soft. And a lot of other sectors in the second half are expected to sort of do well. So from that perspective, we are maintaining our target price of 27,500 for Nifty and about 15-16% CAGR growth in earnings for the next 2 years.
Right. What's been your read through, Pankaj, when it comes to IT? And now you have both Wipro as well as Infosys. We were just chatting with the management of Wipro. The Q3 guidance clearly has disappointed, and the EBIT margin as well has not seen much of an uptake at a 16.8 versus 16.5 on a sequential basis. That's really not much of an improvement. And for Infi as well, there's really no positive surprise. We've seen how the ADR in any case got slammed overnight.
Absolutely. I think if you look at overall second half from the commentary, what you pick up, most of the IT companies, the second half is expected to be softer. And you're really not, so there are no major fireworks expected, especially in the second half. And while if you look at, for example, in Infosys, the smaller deals are seeing traction, but the big deals are still sort of missing. And which is why I think this particular quarter, we don't expect any major updates for most of these companies. And also we have elections ahead in US. And again, the taxation policies are diametrically opposite for both the presidential candidates. So I think all of this is really not going to trigger any kind of positive surprises in the tech stocks, at least in the near term. I think Q4 is where we need to see, because Q3 largely is expected to be softer quarter for most of the companies. So from that perspective, I think we have to probably wait for another quarter for something better to happen.
Stay with us. Meantime, CNG gas, that's expected to become costlier as the government cut the allocation to the domestic APM gas. So what will be the impact of this on the city gas distributors? Let's understand. Sumit joins in. Sumit?
Well, city gas distribution companies would remain in focus given the fact that there is now a pricing versus margin conundrum for them, and this is because the government has cut the APM gas allocation by as much as 20% from current levels of around 72%. Now, the reasons behind this cut is the increasing number of geographical areas coming under CGDs, lower gas production by upstream companies, and also because they want to divert some of this gas towards ONGC's petrochemical plant. Now, because of this lower APM gas allocation, the cost of gas for CGDs, that is city gas distribution companies, will be increasing because they'll have to replace this lower price gas with higher priced gas from the spot market. Now, if you, for example, spot market prices are at around $13.5 per MMBTU, while APM gas was available for CGDs at around $6.5 per MMBTU. Now, because of this increase in gas cost, the margins of the city gas distribution companies could be hit anywhere between 2.3 to 3 rupees per SCM, that is nearly 25 to 43% of the first quarter FY25 EBITDA per SCM earned by this city gas distribution companies. Now, how can they avoid this impact? Now, city gas distribution companies will need to simply take a tariff hike or increase in the CNG prices of around 6 to 7%, which could be as much as rupees 5 per kg to completely pass on this impact. But can they take a price hike is the key question. Now, analysts believe that the chances of taking a price hike specifically in Delhi and Maharashtra are low, given the fact that there is upcoming state elections in both these states, and apart from that also because of taking this price hike, the spreads between CNG versus petrol and diesel might also reduce further, which could also demotivate consumers from converting more cars into CNG and could lead to lower volume offtake. But will it actually impact volume is something that we do not have an answer currently, because we'll have to wait and watch how CNGs, whether they take a price hike or not, and in fact, even if they take a price hike, whether there is an impact on volume or not. But assuming that there is no price hike, the FY26 EPS for these CGDs could be cut by around 20 to 30% going forward. However, there is one key beneficiary of this change in the APM gas allocation, and that is ONGC, because this 20% cut in the APM gas allocation, that is close to 4 MMSCMD of gas, translates to around 7 to 8% of ONGC's standalone gas production. Now, this gas will be sold by ONGC at a higher price, which could be higher by around $2.5 per MMBTU, and because of this higher price, ONGC's EPS could rise by around 0.8 rupees per share, which is nearly 2% of its current EPS on an annual basis.
Right, all the city gas distribution companies in focus, as would be ONGC, the key beneficiary. But Pankaj, have to try and understand what is it that you're making of auto companies right now. It doesn't seem like that the festive season so far at least could actually pull through a major demand uptake. But looking at the way, the commentary was from Bajaj Auto yesterday, the fact that, the stock almost seemed like priced to perfection, and thereby the bigger disappointment as well, and the way it got slammed yesterday along with the other auto pack. What is it that you're making of this?
I think Bajaj Auto specifically, two challenges. One, I think it's trading at 30 multiples, which is quite a high number. So it's literally 2 times PEG. Usually it trades at 1.5 times PEG. So valuation was definitely higher. And then on top of it, if you're guiding for 3 to 5% kind of a muted festive season growth, I think that sort of impacted the stock. And I'm afraid that this gas price hike or lower gas allocation to see the gas distribution companies is further negative for auto companies, because if we need to understand this, for a company like Maruti, 25% of the portfolio is CNG powered vehicles. Bajaj Auto has just launched a CNG motorcycle, and they are sort of quite aggressive in terms of expanding into this space. Even for Tata Motors, I think of the overall product mix, it's about 16 odd percent. So I think unless some commentary gets better going forward, I think this news is also even negative for auto in general, because CNG was one of the few portfolios which was doing very well for most of the automakers.
No, I just want to look at the numbers here, and I go back to that same point once again, that you look at choice of words which is coming from managements, Bajaj Auto, Nestle, Havells. So Havells is a consumer company. Nestle is a food company. Bajaj Auto is a consumer company. Reliance is a conglomerate. None of the companies have come out with numbers which could be called as big bang. Not even a single upgrade has come. Axis Bank slowdown clearly seems to be visible. So the fact that Indian markets are down is nothing to do with the globe. It's local, it's economy, it's earnings, it's levels, it's liquidity. These are the factors which are at play. So Pankaj, where does the buck stop? Do you think one should wait out for the earnings season, get a complete clarity as to where earnings are headed, and then invest?
So I think, Nikunj, if you look at, so this quarter in general was expected to be soft, and so there are no magical surprises in terms of a softer set of numbers. But yes, given the fact that the markets had sort of rallied, so it is really not helping the market in terms of moving higher. We've already seen about 6% kind of a cut from the top, and which is what the normal correction which we have seen this year. And obviously valuations are relatively higher for Indian markets compared to what you see for global peers. So one way to sort of address this is that if you're expecting a 15-16% kind of a growth, the price performance could be slightly lower at about 12-13% to sort of neutralize the kind of rich premium multiples which we are getting now. But our sense is that Indian market is not about it's not a story about a quarter because historically the multiples have gone up largely because this is the first time we are seeing a good comfort in the overall long-term growth of the economy and also of the companies. The corporate balance sheets are still good. So I think uh, just some softer commentary is not really going to alter the direction of the markets. Yes, possibly we could get another some 4-5% kind of a correction more. But in general, I don't think this quarter is making us turn negative on the markets.
Why did Hyundai IPO just about scrape through? I mean, the retail interest was just not there. What happened?
I think, Nikunj, we had given a subscribe to this and it's trading, it was offered at 26 times. It is half the size of Maruti. Maruti trades at 30 times. So obviously, there was not much of a gap which the management has sort of left. But we are liking the stock from a longer term perspective. But I think a lot of people invest in IPOs, keeping the gray market premium, which had sort of subsided. So I think that is the reason because of which, and also it's a sort of a fairly large IPO. So I am not really surprised with the kind of reaction what we have got.
Well, the SGX is indicating, or GIFT Nifty is indicating, that we would almost be close to that September low, right, Kunal?
Yeah, I think September lows.
24680.
So I think August low was around 23,960 and September lows was 24,750.
So what is the line in the sand beyond which you would say this market becomes weak, and what is that other pivot point beyond which you would say market becomes a short?
So it becomes a short below 24,750 spot.
We're almost there today.
Yeah. So on the spot levels, we should be there. We are just, I think, 50, 60 points higher on the
So
spot levels.
even if it's a gap down, sell the market.
No, I think we need 1 day of confirmation in terms of closing. So, what could happen is, in case if the markets, fall intraday, and then, if we rally and come back again to that 24,750, 800 mark, then there's still a buffer which, gets delayed by at least a couple of days more. So it's always better to try and sell on confirmation rather than on that slight anticipation.
Nuresh, your thoughts on the same point?
So this is a market where you want to trade lesser and lesser because there is no strong follow-up on the selling or the buying pressure. And we have a divergent moves across the indices. So if you look at yesterday, Nifty has come close to the recent swing lows to be broken. Bank Nifty has not. The mid cap and the small cap indices are much higher. So out here, we don't have a confirmation across the board. And then the downside is 24,000, which is the recent last 6 months lows. Around that price point, there were quite a few bottoms. So at 24,700, you have a 2-3% downside and you are stop at 25,200. So the risk reward is not great. It just tells you this is a choppy market. We're getting into a mode where we'll keep drifting rather than seeing any trending moves right now. So this is a time where you want to trade lesser and lesser size.
Pankaj, what is the tone and tonality at the retail level in the last couple of days? I mean, is the leverage coming down? Is participation coming down? Because, the two important short-term indicators, one is mood and second is momentum. The momentum is waning away and the mood has become sour.
I think the mood keeps on changing depending on how things pan out. So post Haryana, the mood definitely got changed, and now you have upcoming US elections and you have elections in Maharashtra. So obviously anxiety levels are higher, and our sense is that moods can change post favorable outcome in some of these events. But having said that, I think overall we don't see much of a fear in the market. Also, the fact that the corporate balance sheets are good, I think that sort of gives us confidence that overall things have not been sort of so edgy for a lot of investors. And which is why I think our sense is that there's no major sort of a downtick in the overall sentiment of the market. It is just that the anxiety levels have gone up. One, the result season is definitely not helping. The other is you have elections around the corner, and where again you have fairly diametrically opposite, if I say, taxation policies, and then you have elections in Maharashtra. So all of it is keeping the anxiety levels high. But I think this will sort of subside post these events.
Okay, let's quickly get in those mid-cap trading strategies as well. It's 9 a.m. and given the fact that it has been a bit of a mixed handover from Asia, while you had a positive close on Wall Street, our markets as well are looking a little bit mixed. 0.5% lower for the Nifty and for the Sensex as well. We're down about 50 points right now. So Kunal, what is it that you're tracking from the mid-caps?
So I'll go for buy on NCC. The stock over the last 2 days or 3 days has seen a mild pickup of price action from 295 to 310, 309, where it closed yesterday. It's on the verge of a 50-day moving average breakout. So looking at the recent correction, the stock had already gone through 2 months, 3 months of correction. So my sense is that the stock could probably head towards a slight outperforming breakout. 324 as a target. Stop was to be kept at 303.
Okay, Naresh, let's get in your mid-cap trades.
So continue to be bullish on Bombay Dyeing. Yesterday, the stock broke out into new 52-week highs. Volumes were large, pulled back a little by end of day given the market sell-off. Still looks interesting. A fresh 52-week high, a consolidation breakout of last 3 months, and sustaining above the 240 mark. So stop loss now at 228, target price of 270.
All right, there you have it. Those are the top mid-cap trading calls. Meantime, Pankaj, curious to get in your take on Zomato, that fundraise that they are mulling, a QIP route that they're looking at on the 22nd of October. How are you reading into this?
Sorry, don't cover the stock. I won't be able to give any views on it.
You don't cover Zomato, Pankaj?
No.
Why?
So I've been saying this for a long period of time. Typically, whenever so we are a bit traditional in terms of our approach. So any company which is trading more than 10 times sales is a sort of I think beyond that it's very difficult to think future. Then you need to be really constructive in terms of imagining a lot of things. We are really weak there. I think the only segment what we like, which is 10 times sales, is something like CDMO because, but there the margin profile is in the range of 35 to 40%. And our sense is that Biosecure Act is definitely going to be a big tailwind for a segment like this. Otherwise, we are sort of conservative from a valuation perspective.
Why do they need cash? You would ask yourself. They have 12,000 crore cash after that Paytm insider acquisition, and they're generating a lot of cash because of the treasury income what they get. Because this cash, imagine if this cash gives you 9-10% return, right? 7-8% return is government yield return. So there is smart amount of cash which kicks in, and the business right now, the existing business do not need that kind of a deployment. So the cash what they're getting, I think, is far greater than what they need is. So if they're doing a QIP, could this be an enabling resolution? Or this, in a sense, could bring the FDI and FI limit down in Zomato, which could really help their quick commerce business, because that's where the law is different in terms of the FDI and FI ownership. If it falls below 50%, then there would be substantial changes. Let's see what the thought behind this. We'll have to wait for the numbers, which will come out next week. But that FI holding in Zomato, I think, is something which it comes below 51%, then it could be game changer per se. Public is 28%. So this is one Indian company which is owned by Indian public. FI is large, DI decent, but Indian public is actually higher than domestic institutional investors. Okay, what do we have? 904, the first rates will start kicking in terms of where the pre-open rates are. I want to look at Polycoab. I want to look at the rates of, that's the pre-open session for you. Polycab. I want to look at Axis Bank, you want to look at Infosys, and you want to look at Wipro. Polycab flat, Axis Bank down, Infosys down by 2%, the ADR was also down in the same sync, and Wipro also is up by about 1%, but then there's bonus and guidance, all those factors are at play. So Pankaj, what is on your radar, which you said that, look, markets fall 5%, I'll buy it, market falls 10%, I'll buy more, markets fall 15%, I'll add more, markets fall 20%, which they may not, but if that stock falls 20%, you will double it.
So, Nikunj, we have been very selective in giving recommendations largely because there is no follow-up which is happening. So you have one day, a certain category of stocks are up. Largely we are sort of focusing, say for example, within IT, we have recommended Newgen Software with a target price of 1465. The results were good, and our sense is that the company will keep growing at 23-24% both revenue and bottom line over the next 2-3 years. And so I think one needs to be very selective, because up till now the results are really not sort of helping the market. Similarly, for example, we are expecting hospitals to sort of do well. So Narayana Hrudayalaya, we have been sort of recommending, because our sense is that they're doing a capex of 3,000 plus crores, which is quite aggressive. That should sort of provide some uptick to the numbers FY27 onwards. So I think one needs to be very selective in terms of stocks.
All right, Pankaj, going to let you go. Thank you for joining in and sharing with us your views on the market.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.